Kitco News special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corp.
Welcome back to Kitco News ongoing coverage of PDAC 2023 in Toronto. My next guest is Peter Krauth. Peter, of course, is the editor of silverstockinvestor.com and the author of the recent bestseller, The Great Silver Bull. Peter, welcome.
Thanks for having me, Ernest. My pleasure to be here.
So The Great Silver Bull, I guess this could be a market prediction. It could also stand in as a pretty good description of the author.
Absolutely. I'm naturally quite bullish on silver, and I think that it's going to. We're going to see some incredible runs in the silver price over the next, say, 5 to 10 years.
All right, well, let's get into that. Your essential argument is that the investor community and industry are going to need silver, and supply is not going to be able to meet demand.
Exactly.
So let's get started with on the investment demand side. You've said recently that the 60-40 portfolio is broken and you don't see it being fixed anytime soon. Why is that?
So I think interest rates and inflation have everything to do with that. We've seen record in terms of the last several decades. We've seen record inflation. I'm not convinced we're going to be able to get it back down to where central banks would like, which is about 2%. And when I looked at a chart that goes back 100 years in terms of the 60-40 portfolio, the first thing that really struck me was the drawdowns. So last year was a dramatic drawdown. I believe it was somewhere in the order of about 17% for that portfolio. And yet that's what Wall Street sells to people in terms of how their portfolio should be allocated. 60 stocks, 40 bonds. And so when you look at that chart going back 100 years in that portfolio, what I saw and what I took from that is that these big drawdown years actually come in clusters. So that's a little bit scary. So we had I think it was in the 30s and then again in the 70s, you had these big drawdowns. They don't necessarily have to come in consecutive years, but when they come, they don't come by themselves. So the clusters suggest that we could be headed for several more years of a difficult period of returns for the 60-40 portfolio. And so I think investors really need to start looking for alternatives.
All right, so let's get into that inflation. I guess this is correlating with inflation. You've said that inflation is going to be very supportive of silver prices. And you've also said that this recent peak in inflation, which we've since pulled back from, is not the true peak.
Exactly.
Explain that.
So our best analog is the 1970s. And if you look at a chart of inflation going back to, say, late 60s to currently, you had actually 3 waves of inflation in the 1970s. And I think the mistake that most of the market is making right now in looking at this recent peak in inflation, where we, as you said, has been backed off from, they're looking at the last time that we had serious inflation, which was late 70s, early 80s. And what happened was Volcker stepped in, was able to hike rates tremendously and essentially killed inflation. After that, we had a multi-decade period of 2 to 3% inflation. And so the market is looking back at that and thinking, that's the last time we had serious inflation. That's how it played out, and that's how it's likely to play it out again. And yet, if you look at that chart that goes back to the mid-60s or so, I believe that this first big wave we've had of inflation over the last couple of years is actually similar to the first wave of the 1970s. And that was followed by 2 subsequent waves of inflation that were both stronger than that first wave. So you had this rise, a trough when the Fed would step in, increase rates, things calmed down, and then the inflation came back. It rose again. Inflation came off, and then eventually rose again, and you had this peak in 1980 or so of about 18 to 20%, which was really quite something to deal with. And just to kind of point out, there's a big difference, and I talk about that in the book. There's a big difference between then and now, which I feel is even more bullish for precious metals, and that's the fact that in that period, in the US at least, the debt to GDP ratio was 35%. Today we're at 130%. So Volcker had a lot of room to increase rates dramatically because for the government to support the interest on that debt was much more doable at 35% of GDP. Today, I just don't see that happening. It would simply crush. At about 6%, we're looking at interest payments alone in the U.S. at close to $2 trillion annually. It would be the biggest expense for the U.S. budget, would be interest only. So.
Right, and they ultimately had to raise interest rates very, very high to ultimately tame inflation.
Exactly.
So if this is the first stage and we have a little bit of a pullback in inflation, we have much higher to go and much longer as well.
I think so. I think we're looking at least a decade of this kind of inflation. Remember too that to cure inflation, you need to have rates meaningfully above the rate of inflation for some period, perhaps months, whatever it might take to convince the public that you really mean it. And so let's say, I tend to say right now that 4%, it's funny because if you look back to pre-2020, a lot of central banks, Fed especially, was almost desperate to get inflation back to 2%. We were in this range, 1 to 2%, and now they got more than what they wanted. We're at 6, 7, 8, 9%, and I think that to be able to get inflation back to 2% is a pipe dream. I think what we're going to have to live with is 4%. I like to say 4% is the new 2%, and that's the kind of low-ish range that we can probably expect over the next decade, and I would not expect it to remain there. We're going to have these waves that we're going to deal with, successive waves of inflation.
So the essential assumptions in your book and in your recent research are that 4% is the baseline going forward.
Absolutely.
For around 10 years.
That's right.
Okay. Well, we've also seen enormous strength in the US dollar, obviously, over the last year, even in very recent months. And that's held down gains for gold and for silver.
Yep.
So we haven't seen the big move. When will we see a big move in price upward for silver?
So silver trails gold. Gold is the leader. So I base myself on how and when I expect gold to move. And for me, I believe that the most likely trigger is going to be, and this could happen in advance because markets price things in advance, but for the market to sniff out an end to rate hikes, obviously they look at the Fed in particular, the largest economy, the most influential. And so when the market sniffs out an end to rate hikes, that's when I think that we can see gold really start to take off. Silver will very much follow that, and that's, I believe, going to be the trigger for much, much higher prices in both metals.
But has the US dollar been hiding some of this strength as well?
Absolutely, it has. I think that you look at the last, say, 5 months or so, when the dollar index peaked at 112. We're currently around 104. It actually bottomed close to 100, 102. It's had this recent counter trend rally from that level, and we've been just recently over 105. I think we could actually see the dollar index go somewhere to 106, 107. The technicals are perhaps useful in terms of an indicator in that case. The 200-day moving average is around 106, a little over that. That might end up being some sort of overhead resistance for the dollar index. And so from there, I would not be surprised to see it peak and start to pull back. So this recent counter trend rally, I think, in the dollar index is what has put some pressure on silver and gold. It's interesting to note that over the last 23 years, there's been a negative correlation between silver and the US dollar of 80%. So that's a really strong correlation. If you want to decide where you think silver is going, you have to determine what your thesis is for the dollar. And in my case, at least, I think that we are in a longer term downward trend for the dollar, a secular bear. It peaked in 1985 at 160, I believe, the dollar index. In 2002 at 120, last year at 112. So these are lower successive peaks. I believe we're in a multi-decade downward trend in the dollar. My first target in the dollar index is somewhere around 95. As I say, we're around 104 right now. And then ultimately, sort of maybe medium term, somewhere around 90, which is where we were pre-COVID in terms of a low in the dollar index. So I think
that would be enough to be very supportive of silver.
That would be very supportive, absolutely.
All right. Well, let's turn to the industrial side You've said that you've described industrial demand as providing what you call a rising floor for silver prices. What is that made of? Can you break down the industrial demand side for us?
Yes. So industrial demand is made up of things like medical applications, electronics, automotive, and one really big one, I'm going to say the actual elephant when it comes to industrial demand for silver is solar power, because it's the single largest factor in silver demand on the industrial side. Represents 12% of the entire annual demand for silver for the entire market. So really, if you've to look and to determine where industrial demand is headed on the silver in the silver sector, you have to really watch very closely solar, and solar has just been roaring. It's been tremendous, and I think that a lot of the forecasts for demand for silver from the solar side, in terms of solar panel production, has been underestimated.
So is that 12% of industrial demand or 12% of total demand?
Total demand.
Total demand.
It is. So
this has been increasing very, very quickly in recent years. So the trend is very, very up.
Very much so. So 12% of total demand, that's 140 million ounces out of 1.2 billion ounces. If you look at just some recent forecasts and not that far out, the International Energy Agency forecasts over the next 5 years that electricity from solar is going to triple globally. So, and some of the forecasts that go even farther out, it's obviously the farther out you go, the harder it is to be precise and accurate. But just on that basis, their forecast for 2030, that's 8 years out, would be that global electricity from solar would be up 8.5 times current levels. So my math tells me that
8.5 times 12 times the rate of growth.
Right, you haven't factored in some likely growth. So even on that basis, you're looking at 8.5 times, say 140 million ounces. My calculation actually was before the recent upgrade in terms of demand. So we're at, in 8 years, almost the entire annual supply of silver, recycling and mining would go just to solar. Just to solar. We haven't talked about any other industrial applications. We haven't talked about investment demand. We haven't talked about jewelry. We haven't talked about silverware. So, and a lot of these applications, there are always new applications being developed. And, silver is the most conductive of all metals. It's the most reflective of all metals. It's no surprise you're seeing it everywhere. If you look at the automotive industry, there are dozens of applications in, not even in more technologically advanced cars, just cars of the last, say, 10 years or so, say internal combustion engine cars, that there are all kinds of applications that use silver. Everything. I mean,
everything is becoming more.
It's
not just electric cars that are becoming more electrical.
Exactly.
Conventional cars are also getting a lot more technology on board.
Exactly. I mean, every contact you could imagine, your electric windows, your push start button, everything has silver in it because it's conductive and it's reliable. It doesn't corrode easily, and it transmits quickly the energy, and so you find it everywhere.
All right. Well, that answers the
industrial side,
the investment side, and I think you've touched on supply.
Right.
Now, let's challenge that a little bit. What if we do see a persistent recession combined with high interest rates, but really looking at the recession side? So we have negative growth. We have could that really shunt a lot of that expected demand for silver, especially on the electrification side? Could that eliminate a lot of that demand? Because we know that these targets set by jurisdictions like California,
right,
they can back off of that if they don't see that being possible. So a lot of the projections for demand, not just for silver, but for
right,
many of the things that are feeding into electrification, assume that we are going to make those targets or come very close.
Exactly.
What happens in an environment where Europe, for obviously in the middle of an energy crisis and low supply of lots of things, we have supply constraints from Russia, from Ukraine, and all over the world by extension. What happens in an environment where electrification gets scaled back dramatically?
So I'm not that worried about that. Obviously, you have to always account for possibilities. I'm not saying that could not happen. But so the first thing I do want to say is that in the near term, my expectations are muted for the silver price. I'll be perfectly honest. And the reason for that is, you look back historically what's happened during recessions, and I have no clear outlook in terms of what will happen with recession. I do expect one. The degree of the recession, I don't know, but I do expect one. And if the Capital Light Research has done some great work in this field, and they look back at recessions, there were about 7 that they tracked going back to 1973. And it was clear they compared gold and silver and how they behaved before, during, and after the recession. And it was clear that before and during, gold did better. After, silver easily outperformed gold. So as you come out, there's all this spending that happens, that takes place.
Because the industrial demand picks up so massively.
Exactly. That's exactly right. And so now, besides that, if you look back, and not very far back, at what happened in 2020, when we had this hit from the pandemic, you'll remember that a lot of the stimulus from governments came on the green energy and transportation infrastructure side. Now, silver is crucial in all of that. If you think about infrastructure, electrical installations for solar, that is the biggest actual increase expected by the International Energy Agency in terms of build out from solar over the next several years, as opposed to retail, for example. And so, as I say, we know that governments, if they start to stimulate coming in a recession and coming out of the recession, the accepted programs in that respect tend to be infrastructure, tend to be green transition, green energy types of programs. Don't forget, central banks are hawkish right now, but I like to look at what governments are doing, and you've got a big compensation from the, and it's perhaps not that obvious, but you've got this big compensation from this hawkishness from the central banks that are on the monetary side, but the fiscal side, which comes from governments. In the U.S. alone, you have a $1.2 trillion of spending from the Infrastructure Act, the Inflation Reduction Act, or as there was a presentation yesterday by Robert Friedland, and he calls it the Inflation Creation Act, which is
an act that spends an enormous amount of money.
It's hard to believe how it's going to kind of cut inflation. But in any case, we're looking at $370 billion from there going to climate reduction and green energy transition types of spending. This is a lot of money over the next several years.
Silver, that money is going to be there. Unlike private money, where they can get cold feet and they can pull out. The United States government, when they commit to these things and the Congress signs off on them, that money is going to be spent.
Exactly, and that's where I have I'm favorable in terms of the outlook for silver, even in that kind of scenario, because that will be spent. In fact, they might even gear up the spending to help compensate for a slowdown economically. They want to help compensate. And so, as I say, silver is crucial in all these applications on the infrastructure side. You're talking about, as I say, solar panels, EVs. They want to build out 500,000 EV chargers in the US.
Right, the charging stations alone.
They apparently use more silver than EVs themselves use, and EVs use twice as much silver as the internal combustion engine vehicles. So, also very bullish.
All right, so we don't need everything to go right for silver to see a big move up.
Exactly.
Well, we're going to have to keep a very close eye on silver, and we'll have to have you back when we see that big move in US dollars, including.
Right. Look forward to it. Thanks very much, Ernest. Appreciate it.
I'm Ernest Hoffman for Kitco News. Keep it here for more expert analysis from PDAC 2023, and don't forget to subscribe to our channel.
Kitco News special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corp.